My guest needs no introduction. Ronnie Screwvala has been one of India's most successful entrepreneurs over 3 decades. He runs one of the most largest, he co-founded and runs what is Upgrad, which is among the largest edtech companies in India. Ronnie, thank you for taking the time
to come down
all the way to Singapore and join us for the session. I want to start with a big picture question in the sense that you are among the few successful entrepreneurs like over three decades. Like, how do you sort of remain, successful over 3 decades? Is there a playbook?
I'm not a good one for playbooks, so no, I think nobody has a playbook. And anyone who has a playbook looks at somebody else's playbook, I think is in for trouble. I think each one has to have their own evolution of what happens there. I think the first one, and I think which is obvious to most people in this room and anywhere else, is that you can only do that with a lot of failures. And I can tell you my ratio of failures to success is 8 failures to 2 successes. And I think today when you're looking at the entrepreneurial spirit, just not in Southeast Asia, but around Asia, everyone needs to accept the fact that you're going to fail more often than you're going to actually succeed. The key today, and to answer your question specifically, how does one reinvent oneself every decade, so to speak, is I think really focusing on the fact that if you don't take a certain amount of risks, you're not going to be able to reinvent yourself. So unfortunately, I don't have a playbook for that, but I think what I looked at doing in media and what I'm doing right now in education actually has a lot of similarities.
Got it. While you don't have a playbook, you talked about evolving yourself. So how have you evolved or changed over the last 30 years? Like more as an individual. Have you do you take more risks today, or were you taking more risks in your 20s?
I think you take very different risks when you're in your 20s. You're a lot more opportunistic. I think as you go forward, your risks appetite becomes larger. But your gut instinct gets better. And I think if you can combine the right gut instinct, which is a combination of experience from a lot of failures, that really is what stands you in good stead.
Yeah. I just want to switch gears and look at the theme. Our topic is edtech and what's happening in India.
And it's my job over the next 37 minutes to change the title of the session today, because there's nothing actually wrong with edtech in India.
Yeah, so I want to hear your view, like big picture. Like if I was sitting in Singapore and look at the media coverage of the edtech in India, a lot of the coverage is about layoffs. It's about companies not being able to raise funds, share swaps, mergers. So there is definitely something happening, right?
Yeah, you're reading the wrong media. I think that would be the first thing that's happening for sure. We have to look at this very, very objectively. 3 companies or 4 companies do not talk about an entire sector. And you can talk about some of the elephants in the room, but I can genuinely say, and I think this doesn't apply for India, but it applies for pretty much anywhere and everyone in Asia and around the world. There is a massive reskilling revolution going on. I think anywhere and everywhere, people have accepted the fact that every 4 to 5 years, you need to figure out how, as team members. 3, we should not underestimate the entrepreneurial wave that's happening, especially in India and actually in Asia. And if you look at that, that actually means you're changing the profile and the approach of how people look at their careers, because they're being a lot more entrepreneurial within an organization. It's not very coveted now necessarily to work with only large companies. It's not coveted to just be a banker, which was a pursued career option 10 years back. And today, more than ever, a lot of people have a great respect for formal education, but there's an equal requirement for what one would call being job ready. So if you look at that ecosystem, can't be more relevant than a country like India. If you're talking about the media reports, yes, I think there would be a certain sense of about 5 or 10 investors who have over-invested in 2 or 3 companies, taken the valuations to a level which are obviously not sustainable. So I don't want to get into a critique of that unless you have a specific question on some of that. But edtech is really about redefining how education is looked at. Unfortunately, the problem for all of us here in this room is education is a very static word. It's a calendared event. Everyone has a concept that you go to school, you go to college, you throw up your hat, and then you're done. So actually, the word education is to be redefined. I think the technology part of edtech that is coming there, most people have veered because of media to the K-12 sector. But the real action is happening in skilling, it's happening in higher education, it's happening in job enablement. And there, the companies are flourishing incredibly.
Interesting. I'll come to several of the points that you mentioned a bit later. But just one more big picture question, Ronnie. If you spoke about India, you spoke about Southeast Asia. We've seen what happened to the overall edtech space in China. A lot of companies pivoted, the monetization challenges that they faced, the crackdown from the government. But are there any learnings that Southeast Asian or Indian edtech companies can take from what happened in China?
So I think there's always learnings, but if you look at China, it was not much more a regulatory shift as more a political shift, a social shift from that perspective. Obviously, to some extent, there was a question of indignation towards wealth creation and very large companies, combined with the fact that the US, China had its own stress, and listed companies had to get themselves revalued, combined with the fact that a single-child home put a threat as to what is the perception of education when you look at the formal education part still today looks like and is always relegated by governments as a not-for-profit. So when you put a profit-making organization that's listed at $100 billion, there will always be that gap. I don't think there are too many lessons to understand that, because that comes with a certain sense of a government and how they want to approach their population, their country. Countries in India, around Asia, the US. The US has its own sense of regulatory challenges today. If you look at the edtech companies there's a fair amount of outbursts there of overcharging and exploitation, where it's becoming almost unaffordable for higher education and degrees to be there, right? And it doesn't make a difference whether a president comes in and waves off 30 years back of loans and debt. You're still not insulated for the future. So I think specifically there aren't any global lessons. I think for investors looking for the lesson that says, oh, I'm not going to get into regulated areas, I think that would be a little short-sighted, because I don't think it's a regulatory challenge. And in countries which are as large as India, there's an incredible regulatory framework already in place, which has got many shock absorbers more than we can think they are.
Got it, yeah. Let me just come back to something that you mentioned earlier. You talked about few companies in India can't be representative of the sector. There are elephants in the room. Just one specific question. So, again, back to the media narrative. All of the coverage in edtech, not just here or globally when it comes to Indian edtech, has been dominated by what's happening to India's largest edtech player. Whether they're filing the financials.
Largest by value.
By valued edtech player. Yeah. Whether they're filing the financial slate, whether the firings the layoffs that they had, the expansion challenges. So has that colored the narrative? Yeah.
Unfortunately, in the circles of private equity and investors, the same people who actually instigated the entire thought process, there's an element of everyone wanting some sense of clarification. But look, I think there's a lot that's happening there. There's a certain amount of scale. I think it's naive of some of the founders to think that you can actually grow at that particular place. But I think the investors have to take equal accountability, if not more accountability. At a time like this, I think personally, what is a big disservice that has happened to edtech in India is that the investors in this same company have not spoken up. If they know everything is fine, we haven't heard all the early investors who took billions of dollars off in secondary valuations in that company to actually go out there and speak up in favor of the company. So I think that's where founders are left high and dry, and then media takes over. Now, the problem is when you set yourself up to be a poster boy, you're going to go straight from poster boy to the shredding machine. There's no in between. So you've got to live with that. And then people in glass houses don't throw stones. But I think today it's been an unfortunate combination where I would have expected that if 4 of their early investors or even late stage investors had just spoken up in full support of the company, saying we're absolutely happy. Firstly, this is not a listed company. The dialogue needs to be with 11 investors or 70 investors in the room and in a board meeting. Why do we need to play it out in the media? We wouldn't have had some of the challenges that the companies had right now. I'm not a spokesperson for or against. It's very difficult to run businesses. It's very difficult to build businesses. I'm very empathetic to any founder and entrepreneur in the world. Each one goes through their own learning cycles. And I think, they'll get past it. And somebody will have to be accountable to a certain extent in terms of what the right water level is for the right valuation. But I think the attention it's got is partly because of the valuation, which is partly done by a lot of investors who genuinely actually thought they were on a different train than they were on.
Interesting. So let's then come to Upgrad specifically. You are in Singapore. You are looking at Southeast Asia as a big market for you. I understand you're headed to Vietnam next. You're looking at this region. Your co-founder has moved to the US because the US is, again, a huge market for you. But if India is such a big market, 1.4 billion people, a huge addressable market, why, not just you, but why are all edtech companies rushing to the US or coming to Southeast Asia?
I wouldn't use the word rushing, but I think firstly, India is a very large market, and it's going to remain an incredibly large market. It's one of the markets where price sensitivity has actually shown that for education, if you don't discount it and you give the right value, people are willing to pay. I think the naysayers, when we started up and we said we'll charge $3,000 to $4,000 for an 11-month diploma degree, everyone thought actually that this was not going to happen. So overall, India is a large market. But we see from our sense and our vision that India can be a great catalyst for actually the whole world. Because at the end of the day, lifelong learning, the question of how job and employability will change is not going to change between Vietnam, the US, the Gulf, or India. So if you take, there's an incredible amount of universality in the way we're going to be able to make people job ready. So that urgency, that sense of there. Second, I think India can be a very strong base and a capital because basically learning today needs that sense of mentoring and coaching. And I don't see a country where we can actually, it's an English-speaking country, and we can actually become mentors and coaches for the world. So we're not looking at helicopter landing in a country and looking at it as to how we can take that local market, but actually thinking how we can have an Indian company that can look at it in a very universal manner.
Got it. But Ronnie, you spoke about how when it comes to upskilling, reskilling, the opportunities are the same, whether it is India, US, Vietnam, but sitting here in Southeast Asia and in Singapore, or all of Southeast Asia, there's very little debate on, upskilling or reskilling. Why haven't these countries, overall in the public discourse, the conversation, why haven't they realized that, that is the next stage? Because there's still a lot of talk about universities.
I think we're going to see it. I think we're going to see it, and we're going to see it rapidly. I think Indonesia is a very different market. Vietnam is a very different market. Then you've got Philippines and Thailand, which are very different markets. And Singapore itself, it's a small, but here I think the education level is very different, and career movements is looked at very differently. And there's a high expectancy that government will fund you, for example, for your upskilling in the process. So there's a sense of entitlement in some countries. There's a sense of, I'll see it through in a slightly different way. There's a sense of discomfort in terms of language, because they feel universal, the approach to skilling, if it's not in the English language, in my local languages. So I think those complexities are there. But I would be very clear that it's changing very rapidly. Why is that? Today, for the first time, if you see the entire global economy, even though there are a fair amount of challenges from recession to whatever else people call it, but the employment ratio and the availability for jobs and the aspiration for people to have jobs is actually going conversely, even in the US. And that's because everyone predicted that, technology is going to make a lot of people displaced, but they haven't. They've created some incredibly valuable jobs at a very different level in the ecosystem. So I think it's going to be very counter-cyclical, the entire element. I think education is a stale word, and skilling is not a very aspirational word. So somewhere down the line, the edtech sector is going to have to coin a very sexy word to really get people going. But if you look at the sector, I think the application of what we want to do, there's incredible scope.
So just a quick related question. So all of us here, or like large sections of Southeast Asia, do you think people still haven't realized that all the skill sets that we have an expiry date?
Yeah, I think they haven't realized that, but that's okay. Because when you realize that, it's a penny dropping moment that changes and moves. The point is, do they have an optionality? Because today, you don't have an optionality. The fact of the matter is, everyone here in this room is very privileged. You can take a year off and say, I want to do X, or I want to do Y, or I want to do a course. 99% of the people don't have that optionality. So that's really where upskilling and education companies are going to be able to give them that optionality that says, after you're in your job, you can't take a year off, but here's what you can do. You can upskill yourself. You can actually be a specialist if you're a generalist, or you could be a generalist if you're a specialist. All of that opportunities by being in the online world. And therefore, You'll have to manage it, but you don't have to necessarily step off your career move to actually upskill yourself.
Interesting. I'll come back to Upgrad. Usually when you talk about the whole PE VC space, people talk about two strategies which could either be buy or build. And you're doing both. You're building Upgrad. If I'm not mistaken, you bought more than a dozen companies, and you bought companies all over, all the way from Australia to multiple companies in India, outside India. What's the overall strategy in the sense that how do you put all of these together?
So I wouldn't use the word buy, because I think when you're creating a sector, our vision is really to create an integrated company, and therefore we want to be in the entire life cycle of everyone after K-12. Number two, I think for us, when we look at it, instead of building something up groundwards, which is build a team and then take 1 to 1.5 years, you actually go in and found a founding team that has actually plateaued. Either their shareholding has been diluted or they're having challenges raising funds, and then you bring them in and actually see. The key challenge is if you bring somebody in and you can make that 3x in 1 year, then you've brought in a founding team rather than made an acquisition. So I think we've already established where we want to be in India and around the world in the integrated framework. And to fill in those blanks, we want to either take founders versus somebody that we would hire as a ground-up team. So we look at M&As more as a coming together. And I think that sort of consolidation at this early stage is very heavy lifting. It's hard work. It's not easy work. But once it's done and you've got a team there, it's like having 16 co-founders instead of 3 co-founders. But at the same stage, the ability for each one to work in an entrepreneurial ecosystem is very important. And we're now 7,600 people, we might be 20,000 people, but the entrepreneurial ecosystem of people working in groups of 200, 300 is what we want to keep intact.
Got it. So bringing edtech companies together under Upgrad and expanding makes sense. But at the same time, you're also associated with a brick and mortar campus. What is it that we are missing? Because edtech is the thing, and and then you suddenly have a university which is like a regular university.
Yeah, well, it's not suddenly again. I think it is very much part of the plan, because while we are 100% online, I think for anything to scale in most countries, but definitely in Asia, a little bit of the blended approach and a little bit of offline support is very, very critical and needed. So for us, a university is a very important part, one in India, and I think over a period of time we'll have hopefully one in UK, Australia, Canada, and the US. And I think that ecosystem is to create a base by which we can actually use those and be able to do online learning as a hive off from that perspective. Understand students and psychology in a very different part of you. But I think the blended learning for us is a very important element of what we want to do there.
Got it, yeah. So let me just come to funding and valuations. So you raised a $225 million round, and you raised that during the so-called downturn. What were the conversations like? How do you raise such a large amount when everybody's talking about recession? Investors are talking about valuations coming down rounds. How was it to raise such a large round?
I think, again, we get very influenced by what we read in the media. I think for the right companies who are at the right conversations for valuation, there is always a deal to be had. So I think we were very clear where we were at, where we were growing, what was our context. And I think from that perspective, I think we presented ourselves in a manner in which was realistic. We were not at a lofty level. And that's also because for the first 5 years, we had funded the company ourselves. Not in any sort of bootstrap manner, but just I think that was a luxury that we could afford. We did it, and I think that stood us in good stead, because by the time we were at a particular scale, we didn't have any concept selling to be done for our model and where we wanted to go. So I think that's pretty much where it was. And when you have sensible conversation with sensible people, and the question of it's not FOMO, I think things happen.
But you doubled your valuation in the last round. And just for our audience here, take us through what is it going to be, the money be used for? Is it more M&As, more expansion? What's next?
So at the core level, we're profitable and break even. And I think therefore for us, expanding markets, geography, some offline development and M&As is really the criterion for us to use funding.
Yeah. So you also spoke about how the first 5 years you didn't raise funding. Today, if you look at any startup, even at the idea stage, or people are raising funding. So have people lost that discipline of bootstrapping and sort of going to investors when there's a better product market fit?
Well, I don't know what comes first, the chicken or the egg. Has the investor spoiled the discipline, or have the founders spoiled the discipline? I think every founder comes, I'm from the founder side, right? So, I think every founder comes with a great sense of discipline till they get indisciplined. So I think it's a manner in which both ecosystems have to work in tandem. But, if you dangle 5 carrots in front of somebody, the guy's going to turn into a rabbit. There's no choice.
Also, in terms of milestones for Upgrad, do you see yourself doing several rounds of funding? Is there an IPO in the pipeline, or is it, you need to be at certain geographies, hit certain numbers before? What's next for you?
So I think we don't look at raising funds or valuation as your benchmark. And I think when you're building a company for 10 or 20 years, actually you normally don't. Most people don't. What we read in the media is always the people that feel that you need to have the chest thumping moment with your valuation benchmarks. But when people are building for 10 to 20 years, you actually raise money as and when you need it. Now it's up to investors to create the 4 seasons and then be Nostradamus. So that conflict is very confusing for a lot of founders, because you suddenly say, there's a summer and then there's suddenly a winter, which means you need to go out and get some more money in the context. And I think it's very, very confusing for even the most astute founders. So I think, to answer your question very directly, I think we first plan and figure out what we want to do, and I think funding will always follow. That's pretty much in the last 30 years how one has built a business, and it's worked well for us when you don't figure out that. Because the minute you have a certain sense of funding and you've only done it because you just want to appear, it puts a lot of pressure. Evaluation is the most onerous thing to happen, because if you really want to do it, go to the public markets and get yourself tested, right? Otherwise, it's a conversation between 2 people. What is the definition of unicorn? It's 2 people sitting in a room having a conversation. One guy says, okay, then I'm going to walk out of the room. Somebody says, oh, I've got 5 people waiting for the term sheet. And suddenly you turn to be a unicorn. You really want to be that? You have to necessarily go out and test it on a sustained basis. And I think that's really the key challenge. So for us, an IPO would be a logical thing like any other company, because it has its own visibility over a certain period of time. But again, the most important part of an IPO is not because you want to give liquidity event to 5 people. It's not because you had a valuation that was already inflated and therefore you need to now justify it and you've got pressure on the board. It's actually there where the first thing you need to do for an IPO is to see to it that you've got 3 years of incredible growth ahead of you. Because the people who are coming in there, you're going to build your reputation, and the company is going to be building its reputation based on how people are going to be able to create wealth for themselves on a sustainable, ongoing basis. Not a flash in the pan. Not the first 3 investors who came in and did 100x, found 5 more people, did a secondary. That's good. I'm not saying there's anything wrong with that. But if you're looking at an ecosystem for real wealth creation, it has to be over 10, 20 years, every year sustainable. And that's the reason to do an IPO.
So what's the IPO timeline? Where are you in that journey today?
I think if I had to estimate that, it would be between 2 years to 3.5 years. But again, that's also to do with market conditions as we go forward.
Interesting. Just want to sort of come back to Southeast Asia again, because we're in Singapore. So one of the challenges that a lot of edtech companies have had in Southeast Asia, most of even the larger ones here, have been unable to go beyond a single country of operation. Indonesia's largest operator still remains Indonesia's largest operator. Vietnam's largest player is Vietnam's largest player, and so is Singapore. So how do somebody like you, what can you do differently where you can be present in, say, a Vietnam or Singapore or and Indonesia and Thailand together?
I think it's a little bit about how you write your vision, your mission, and your script on the first day on which you want to plan it. I think when you're looking at solving a local problem, you're going to have to be able to do that. So somebody will say English language, and then you'll go there. Now, English language is relevant in 1 or 2 countries, but it's not. Or you're looking at augmentation for test preparation or tuitions. Then that's a particular segment. I think we're fortunate enough that coming from a very large domestic market demand like India, you can actually plan for having a great reservoir there and then looking at the entire world. So I think when it really depends on the founder. I think it depends on the vision. It depends on the team that you attract. And so that you don't look at a local market. And I think the key part about lifelong learning, about edtech overall, especially in the higher education space, is something where one should be looking beyond boundaries. one has to look beyond boundaries, because otherwise, you're right, you're not going to be able to scale in individual markets. I mean, China, India, US are only the three real markets where you can actually scale. Even in Africa, if you look at it as an entire continent, it's still going to get you a long, long time before you can get some heft.
Interesting. So back to, when you talk about building businesses that sort of scale, when it comes to higher education, higher learning, reskilling and all of that, there are huge gaps. What are the areas that you think that are completely unaddressed, be it Southeast Asia, be it India, we are talking about different age groups also, not, all the way till your maybe retirement age and more.
Joji, it's evolving. And the reason I say that is, 4 or 5 years back, I think for everyone, just the element of online being an optionality to get a degree or specialize or get an MBA when you haven't got one was there. Today, a lot of that has moved to coaching and mentoring. Today, a lot of that has moved to get me job ready. So I think there's a fair amount of shift that's happening here. So to identify those gaps, I think we had a very interesting conversation yesterday at our university where we had a delegation of about 40 people from Australia and universities came in, and they said, so how do you project jobs and careers of tomorrow? And, everyone thinks, the employee thinks the employer is going to define it, but actually the employer, if you sit with them, and we do that in our enterprise business, is actually saying, no, we want to sit in with the younger generation. We want to sit in universities and we want to ask them, so what do you see yourself doing over the next 5 years? What do you see yourself doing over the next 10 years? And yesterday there was an interesting anecdote where somebody said, well, I want to be a mood analyst. And there was complete silence in the room on that because everyone was trying to analyze that what does that mean? And he says, no, I want to actually go in there and I want to be a mood analyst. And I want to go into retail shops that I can actually tell you and tell customers and tell the principals in what mood you're coming in from what you want to spend and shop. Now, that's how disruptive, that's how open-ended the entire element of where lifelong learning is going to go, where job creation is going to go. So I think we're sitting on a cusp of something so exciting that to actually write it and cast it in stone today is a waste of time.
Got it. Ronnie, a lot of companies, when you look at Upgrad, often they compare you to Coursera in the sense that, they think that that's like a competitor or something to you. But
to which one?
Coursera?
Yes.
Yeah. That's like a $2 billion company. Now, what can you do differently with Upgrad to get yourself to, let's say, a $20 billion company?
Yeah, well, I don't want to benchmark with somebody else, but I think being in one of the largest high-growth markets in the world is a very big competitive advantage, and I think that's where Upgrad sits. I think for us to be the teaching capital, the learning capital, the ability to export learning experience in higher ed tech around the world, massive opportunity. Third, our definition of Upgrad is an integrated player. You can come in at 18 years and get an undergrad degree. You can get yourself topped up at a campus where the best people to advise you how to study abroad anywhere in the world. We'll give you short soft skills, we'll give you long soft skills, we'll give you a degree, we'll give you a doctorate, and we'll take your corporate and be able to do that. That integrated model is different from what a Coursera follows today, which is a very single but very successful in their own manner, a silo approach to that. But I think today, edtech is going to be defined by the integrated players. And I can tell you that we've had problems over the last 3-4 years when we've spoken to investors. They haven't understood our model. And actually, that gives us a lot of relief. And I think I did that in media for almost a decade. We're almost half the time when I said we're looking at being an integrated or a conglomerate, everyone thought, no, but you need to be a pure play. Either you're a content player or you're a movie studio or you're a broadcaster. How can you be all of that? And I think the real value that we unlocked was because it was an integrated play. So not to be specific of Coursera or anyone, but I think where we're positioned, the market of India, our ability to be able to leverage what we want to do in the world, our DNA, which actually talks about being a great catalyst for companies and founders. And I think between our founder group now, I think we play a great catalyst role by bringing in companies with different expertise into a fold. And we don't go out and invest 25%. We bring in a founder so that everyone's aligned to that one single wealth creation. Yeah. So that's our story, not in a competitive or a comparable manner.
Yeah. Just the last part you mentioned, when you acquire so many companies or do M&As, every company has a CEO, CFO, CXO level. And when you acquire like 15, 20 companies. You're suddenly bringing in 20 people who ran their own companies, who had, management. From an HR angle, how do you sort of integrate so many independent decision makers into, say, Upgrad?
So you don't integrate them. And HR is not the first word you would use. You would need, obviously, integrate from a financial and a consolidation point of view, and next from a governance, compliance, and legal point of view. And then you just need a core team that's going to be the best catalyst that's going to allow people. Then you find the right synergies. I think I've had the experience of acquiring, but I've also had the experience of being acquired. And I think one understands the challenges of how one can be able to do that. And I think the critical role and the differentiator, and firstly, we're not buying $2 billion, $3 billion revenue companies where, they're massive egos, and then you have to figure out the politics of it. So if you can build an apolitical organization, which means identify companies that are decent size from a $25 million to $100 million revenue, bring those founders in, they've already been hard-nosed, right? Because they've gone through the process, they've raised their funds, they know the challenges they've gone through. And you put them in a room, and if you can get them to feel liberated for the next 10 years by allowing them to do what they most want to do and take away some of the things that they don't want to do, actually magic happens. And having said that, out of 10, you'll get 3 very wrong, and that's also sensational.
Interesting. Yeah, I have a couple of questions more for Ronnie, but keep the audience questions, send them through Slido. We can see it on the screen. We'll take them in the last 5 minutes. Let me just move to Lenskart. That's another mega unicorn from India. They've expanded to Southeast Asia. I think, if I'm not mistaken, they've gone to Japan, several markets. You are one of their investors. So how do you see them going forward?
Yeah, I think Lenskart is a very, very interesting company coming out of India. Again, the entry barrier that Lenskart has created, and just ironically, at the time at which I invested, it was 4 carts. It was a Lenskart, Bagskart, Jewelskart, and there was something else, I think, one other cart. And the fact is that they focused on that. So today, I think their USP is they're a market leader in a space where they've innovated. There isn't that much of competition. They've acquired Owndays, which is a very large and successful company, originated in Japan, but now in Indonesia, and about 30, 35 stores here, and retail presence in Singapore. So I think it's a strong, very, very strong Asia story, highly profitable, 60, 70% gross margins. But one of the few companies that has actually done very well in the online and offline space, and backward integrated. You won't find many startups at that level that is in the new generation of companies. And we've just inaugurated and set up the largest lens and eye care factory in the world just outside of Delhi. And the Saudi Arabian government have invited us to do one in the Gulf. Okay.
Let's 2 more questions before we start taking the questions from the audience. Just before this, you mentioned about you've been acquired. So you sold your last company for well over $1 billion, about 1.4 billion. Any regrets, or how do you look at your journey so far?
No regrets at all. I think life is a process. At that particular point in time, I think it's the right decision at that point in time, and then you go with that. So I don't think I have any regrets. I think I spent the better part of 15 years building what was an important media company at that stage, and then sold it to the #1 media brand in the world, which was Disney. Continued there for 2 years. But I think, the cycle of what media is today to when I sold it has changed so dynamically that as a first-generation entrepreneur, I think I would have owned not more than 10-15% of the company by the time at which, because we'd have expanded. So actually, that's one reason. But I think the second reason why no regrets is in the field that I'm in, because the impact that you can create in education and what we're doing at Upgrad is just incredible.
Yeah. One last question from me, Ronnie. We spoke about, we referenced valuations and unicorns, all of that earlier. India, Southeast Asia combined today may have about 150 unicorns. There are so many digital billionaires, at least on paper. Maybe in the next, come 2025, how many of these do you still see standing?
I would hazard a guess, but I'd say a quarter of them.
Wow, okay.
But let me be clear. I think the main part is, but you'll find another, you might find another 100 that may come up, but in a different environment, in a much more mature environment. And I think some of the corrections that you're seeing today over the last 1.5 years, both from the investor perception and the FOMO that's happened, and from a founder perception, it's a whole circle of life there. That maturity, if it seeps in and stays, unfortunately, the problem is our memories are always 1 year and 6 months. We will go through this entire cycle again 3 years later like nothing happened. Okay, we went through the biggest pandemic the world has ever faced, and everyone went into crazy mode that thought huge business opportunities are going to happen across the board. So if you see valuations, what has happened really, 2019 is pre-COVID and whatever else. So anything is possible, but I think today the reasons why many are unicorns won't be valid. They were not valid when they became unicorns, which is why I think 25%.
Interesting. Yeah, I'll just take the first question from our audience. Your view on AI and data science and its role in reskilling the job market.
Yeah, I mean, I think it's not just AI or data science. I think the question here is, what are the careers of tomorrow? And I just gave you a couple of anecdotal notes. I think definitely artificial intelligence, VR, AR, in one sense, the data science and data skilling today and analytics is a very, very core part of what the careers are. But I think your key question is, how does that work in terms of reskilling? There is a value-added opportunity that is there. So I think Upgrad started, and its first largest course outside of an entrepreneurship course that we started with data science. And we have multiple courses today in many of those. So I think those are very much in the high priority of what we would call careers of tomorrow.
Got it. Before I take the next audience question, one question on your foundation, Ronnie, in the sense that, you run the Swadesh Foundation, in the sense that what's the aim? Because is it to sort of, in rural India or other places where education is still tough, is that what you're looking at? What's the big picture here?
Firstly, our foundation is a complete not-for-profit. I think first, and I started that in my 20s. So I think for today, when people think you need to give back only when you have a bank balance or a white hair, is I think a misnomer. I think a lot of people can do that at scale. So I think our approach there is really to change the fabric of rural India. It's a holistic approach. And again, it was a huge naysayers where everyone said, why don't you just focus on either water or sanitation or livelihood or health or education? But we were very clear that we can't solve a problem in any part of the world in rural if you don't have a holistic approach. So I think we've taken the headwind approach to that. Education is definitely one of the important parts there. But the idea is, how do you raise aspiration level? And I think that's the connect when you look at education today, right? At the core of what are we doing in reskilling? You are taking aspiration levels of people at any stage and taking them to the next level, including all of us in this room. All of us may feel we're super ambitious, but there's still 5 more levels to go for there. And I think that's the trigger point. That's when the urgency comes in that says, I need to know more, I need to reskill myself.
Yeah. The next audience question, and you've addressed part of most of it, but quick, 3 bullet points in terms of what do you think are the reasons why edtech companies are struggling? Is it monetization challenge?
I don't know whether that's generic to edtech companies that are struggling. I think the question here would be twofold. When you're looking at a market making and you're creating a market, the key challenge is that if your cost model, so struggling could be from a financial point of view, or struggling could be to grow and scale. So while there's a market out there, most of it is with consumers who don't know what they don't know. So we have to market make. And when you're market making, the normal course seems to be go out on Google and Facebook, get your customers, do the entire stuff in the cycle. Second, most people look at education as a sort of a one-off. And I think a lot of what you said in the beginning in our K-12 sector, where people have tipped the den, had a little bit of light touch. Overall, if you want to make a change, you need an ROI for everything that you delivered. So today, I think edtech companies are to be accountable for outcome and ROI. If they're delivering that, they won't struggle.
Interesting. Again, what do you feel will be the role of IQ versus EQ, social skills for students?
I think that's a very important question. And I think today, as much as people are moving towards being more job ready, what we are calling soft skills, which actually are the hardest skills, the soft skills. And I think, again, for many people here, if you say, I read just yesterday, very interestingly, that in LinkedIn, what's the most sought after skill? It's communication skills versus anything else. Way above data science, way above anything else. So today, you can be very knowledgeable, but most people struggle in being at the next level. Again, something we all take for granted here on what we necessarily see. But 99 out of those 100 people don't see themselves being job ready because of their levels of confidence level, their level to ability to articulate, to think. You can have data analytics, but if you can't analyze that, you can't do anything else. So soft skills is definitely has to be integrated into everything else. And that is the least we've learned in formal education, other than in privileged education institutions, where a comparative, participative way of learning has always been the case. But for the other 99 people, 999 people, soft skills is, and it's, in Asia, I think that's much more prevalent. It's a very, very important criterion for everyone to be job ready and to get to the next level. Because leadership is about those skills. Today, leadership is not about only domain knowledge. You can do a lot. I think today when a lot of people, and I know with investors, I don't think anyone has become really rich or made a very successful company based on TAM and total addressable market. You need DNA of founders. You have a founder that's ability to be able to see where you want to get and deliver you the goods. That's where you're going to get the 100x. You get a company with the right kind of approach of somebody with a large total addressable market, you might get a 2x. Which one do you want to take?
Got it, yeah. Just one more audience question in terms of how has technology optimized education operationally in the Indian market? Has it made it faster, cheaper, better?
Yes, I think technology has been a very good enabler. At Upgrad, our main focus is to be affordable and accessible. Now, everyone may say, wow, how can you say that when you got a $5,000 or a $4,000 charge? That's $4,000 versus the fact that the same $4,000 would be available offline, plus you'd need to relocate and have lodging and boarding, plus you'd lose a year of your salary. When we're looking at our study abroad model, India is now the largest market outside of China, which is a little bit more insulated for students studying abroad. And while it's about 1 million to 1.5 million students in India that go abroad, we want to make that 5 million, 6 million, 7 million. Not because we want to brain drain from India, because we think anyway 90% of them will come back, because the opportunities for the next 10 years, 20 years are going to be in India. But for those people and for those parents to make it affordable, what we've said is the first year you can do it online in your own country and then go out. And that actually halves the entire cost of that. So affordability and accessibility is going to be extremely important for skilling, reskilling, soft skills, etc. And a lot of people have an expectation that your company and corporate is going to do it. But we have found that 50% of the people don't want to use it from the company. They want to do it on their own. Because then you get the flexibility to be able to manage your own career and be in charge of your own destiny.
Got it. I just have two very quick questions to wrap up, Ronnie. One is, in the current environment, how are investors looking at a market like India? For example, Temasek is your investor. So how does Temasek look at India today?
In my conversations with them, they're extremely optimistic. I think they've doubled down, tripled down, quadrupled down there. I think now with the right valuations, I wouldn't say value corrections, because those were everyone says these are crazy times. I'm saying, no, those were the crazy times. These are the right times in which we are. So I think with the right kind of valuations, real expectations, good discipline with founders, right level of expectancy, the right balance of the market. This is not about the macroeconomics that we are the largest high-growth GDP country in the world. I think it's a lot more than that. It's a very, very interesting market. It's also now becoming a very, very entrepreneurial market. It was always an entrepreneurial market with a jugaad approach, an approach where people would do it, and you would find that more at the store level. But today, the wave of entrepreneurship that is happening in India also makes it an incredible destination.
Yeah, and finally, Ronnie, in the sense, running a multi-billion-dollar company is like a founder. It's a full-time, stressful job. So how do you relax? Do you go back to making movies? Do you still make movies?
As a passion and as a hobby. And the difference between a passion and a business is, in a business you have to say yes 50 times and no 50 times. And in a passion you can say no 99 times and yes 1 time. So that's how I differentiate that. And I think storytelling is at the heart of my DNA. That's the only part I may have regretted having exited. But if you look at education and learning, it's storytelling at its best. It's case studies, it's the teachers, it's the counselors, it's people who've coached you. That's what you remember. So for me, understanding storytelling and giving a narrative of a movie actually makes you understand the consumer even better today.
Yeah, thank you. Thank you for sending in the questions. Thank you, Ronnie. Fascinating session.
Thank you.
Good talking to you. Thank you so much. Yes, thank you.